Hello, this is Ahura from Auto Markets. We'll be with you with a short review on FOMC meeting. It was the fifth meeting of FOMC in 2024. We'll see what's happening in meeting, in the statement and press conference, and what was the market reaction. First, let's review the decisions, and then we can see what's happening in the market. This here. Okay, here we go. And the statement, first let me check the statement. The statement that we had, the difference between this statement and the statement that we had before in previous meetings, that was the most more zoom and more kind of the focus and the labor market data. Federal Reserve members, FOMC members, and especially the Fed Chair Powell, mostly they are thinking, but based on the statement that we have, is that they are thinking that currently at this time, right now, the inflation is kind of in a target, going to get too close to the target, and they are on the way to control the inflation. So they almost did their job in the inflation front. But right now, the focus should be on the labor market, because the unemployment level is increasing. Economic data is somehow getting weaker in some parts. So they have some concerns about the economic growth and about the economic growth and about the labor market. Especially in the press conference, he mentioned that in the second quarter, the investment in the investment in the construction market, in the housing market, is almost stopped. That was not a good news. Stopping the investment or lowering the investment in the housing market is very confusing number. It's a very confusing economic data, because it's one of the biggest markets that they're creating a job. So for the job creation, so the construction market and the housing market is one of the construction sector is one of the most important sections and the part in the economy. So that's why the central banks are already thinking about the lowering the rates. And also based on the press conference, what we understood that right now there are more members in the central bank that you're thinking about the cutting the rate, and also even they were thinking about the cutting the rates in this meeting. So that was interesting. So based on that, we can understand that there are more members are thinking about the cutting the rates right now. So and also that they were even thinking, they were planning to cut the rates in this meeting, but some other parts, the hawkish members, they kind of could kind of just agree with the others members to hold the rates right now for now, but they can signal, but they give the kind of the more clear signal about the cutting the rate in September. Somehow, in some way, the central bank mentioned clearly that they will cut the rate in September, and it's more possible, but still, that's all. Yeah, it's dependent on the data and stuff like that. That they're telling that that's the normal. But with the signals that they had, we can now count more on the rate cut on the September meeting. That we can see that number that we can see in the Fed Watch tools as well. You look at here. In Fed Watch tool for the September CME Group Fed Watch tool for the September, now the possibility of rate cut by 25 basis points is lowered from 93% to 85, 86%, 87% somehow, 86.5%. But at the same time, on the other hand, the probability of cutting the rates by 50 basis points from 3% increased to more than 13%. That's interesting. So now that means that the market got this dovish signal from these decisions, and the expectations is right now more dovish. Based on this market reaction, and based on this data that we had, now we can check the market data. So based on this data, it's very normal to see that US dollar to increase and the stock market, US dollar to get more under pressure and the stock market to increase. Let's start with the US dollar. As the market was expecting for lower rates for this decision and the signal that the central bank they gave, it was already priced in the market, and US dollar already decreased in the last days. And so after the meeting, almost didn't change. Before meeting and after meeting, yeah, during the meeting it was up and down, but still the number is the same. Generally, US dollar index is getting lower, it's getting weaker as we are getting closer to the rate cut, the real rate cut. So that's why the market is getting, the US dollar is getting slowly weaker. We are expecting the next target between 103.60 and 104 marks. That's the next target that we're thinking about. Yeah, right now, maybe in 1 day, 1 or 2 days, it can go up or down, but generally that's the next target as we are getting closer to more rate cut in 2024. Based on that, the stock market also, they had, let's go to check this, S&P 500 is the bigger picture of the stock market. This is stock market. This stock market is just like with more of a possibility of the rate cut. Yeah, that's good for the stock market. It's good for the economy because lower rates means the more economic activity. This is good for the stock market. That helped the S&P 500 to increase last night. But as I told earlier, that decision was clearly priced, it was priced in the market, in the prices. So already we knew about the decision and knew almost in the statement, we had almost no surprise. So that's that was the first market reaction, initial market reaction, and now we're expecting to see stock market to get again, to start again falling lower and go towards where it was moving previously. So now we're expecting to see the stock market to S&P 500 to get lower after the meeting. So that's, I mean, slowly to start lowering. So we don't expect to see the higher numbers from this. Pressures will get we will continue on the stock market. Actually, we have to mention. I have to mention that we are earnings reports these days, and these earnings reports also, they are clearly. Let me open the H1 chart. You can see more clear reactions. This is S&P 500, that reaction that we had last night, and now today you can see here that it's slowly falling. So it's kind of getting slower, getting weaker. That's the normal reaction because, as I told, market was pricing in this position, but the initial reaction was positive. But right now we are getting again the previous trend, which is the lowering from the higher high that we had 2 weeks ago. Generally, with the earnings that we have and also the NFP numbers this Friday, we have the market will get more attention in next days. But bigger picture, S&P 500 trend could not change with these data, as we didn't have any surprise here. Same thing we can see for Dow Jones. Let's open the Dow Jones. That's the Dow Jones chart. You can see after the meeting up and down again, and now getting the pressure. So we don't expect to see any surprise in the chart, and more pressure in the Dow Jones also can continue. Unless that we have some surprise in the stock in earnings. Otherwise, the overall downtrend can continue lower. Same reaction we can see in Nasdaq composite. The Nasdaq composite, you can see that the Nasdaq is increased last night after the meeting, and now slowly again started to lose its gains that it had last night. So generally, the market, Nasdaq also can get back to its overall downtrend and can continue that special, as I told, unless if we have some specific surprise from the stock market, which is very unlikely at the moment. That's the overall market reaction and the condition. Again, if you had any question, please don't forget to write down in the comments. I'll try to get back to you as soon as possible. Have a good time. Bye.